Now let's take a fresh look at this week's forecasts. I will share the financial market predictions for this week from September 29th to October 3rd. The key highlight this week is the risk of a partial U.S. government shutdown and the potential market turmoil it may cause. What will the market look like this week? This prediction is based on a statistical analysis of more than 200 weeks of data, covering 17 different financial markets including currencies, interest rates, and commodities. Let's take a look at the convergence points, or profit-taking targets, for this week from September 29th to October 3rd. US dollar yen is 147 yen and 28 sen. Euro yen is 172 yen and 78 sen. Australian dollar yen is 97 yen and 36 sen. Nikkei 225 is 42,986 yen. Dow Jones is $45,448. 10-year JGB yield is 1.64%. Gold is $3,578. As we mentioned in last week, the risk of a partial U.S. government shutdown on October 1st is becoming increasingly real. If the shutdown does occur, it's highly likely that the non-farm payrolls, scheduled for release on October 3rd, will also be delayed. The Trump administration has ordered large-scale staff cuts in preparation, making it unlikely that the delayed employment report will show any improvement. Fed Chair Jerome Powell has stated that U.S. equities are currently overvalued. Despite warnings from the buffet indicator and many other bubble metrics, the market continues to hit new highs. Many investors have tried hedging by shorting the Nikkei, only to be caught in short squeezes, pushing the index even higher in a self-reinforcing cycle. No one knows when the bubble will burst. Even during declines, many investors view it as a prime buying opportunity. Meanwhile, algorithmic and AI-driven trading has intensified, often causing sharp one-directional market swings. These engineered price fluctuations are particularly harsh on retail investors, many of whom are often shaken out and forced to exit the market. In times like these, it is a sentinel to avoid taking oversized positions. Political developments in Japan are also influencing the markets. In last week, we noted that markets had been pricing in the likelihood of Koizumi becoming the next LDP president. However, in midweek, Shukan Bunshin exposed a stealth marketing scandal involving Koizumi's campaign. This revelation cast doubts on his suitability as party leader, and raised the possibility of Takaichi becoming the next president instead. Toward the weekend, the yen weakened further, with USD/JPY moving close to 150. This shift in the political landscape may have played a role in that move. As we mentioned last week, the impact of a U.S. government shutdown could drag down GDP, and in turn trigger declines in both equities and the U.S. dollar. Given that the U.S. economy is already at risk of recession, the addition of this negative factor could very well serve as the trigger for a stock market downturn. Investors should proceed with extreme caution this week. And finally, a quick disclaimer: this forecast is based on a statistical, stable convergence model. We take no responsibility for investment results based on this forecast. Stay tuned and don't forget to subscribe and give this video a thumbs up. Thank you for watching. See you again next week.